Good morning, toddlers. Today we're going to take a look at Lowe's and why it could, in the near term, correct about 5% to the downside. As you can see here, for Lowe's, there haven't been any insights for quite some time until recently, right at the peak. And now, again, here, Toggle is highlighting some potentially negative drivers, mostly to do with the where in the price range Lowe's has been trading. So let's take a look at this one and see exactly what the gist of the analysis is telling us. Most importantly, there have been four other occasions where Lowe's was trading in this range, and the typical response afterwards was a correction of about 6%, which would have taken the stock to 51.85. Of course, if it were to break outside of this confidence interval, and particularly through 57.15, presumably the overbought condition and the top of the range wouldn't really apply. Let's take a look at some of these other cases. Of course, you can see here, this is just a case of it being traded right against near the highs again, which it's failed to break through before. So breaking through this level really would be quite meaningful. Looking at the past performance, of course, you can see that actually most of the outcomes were definitely substantially negative. And so while there is a caveat of having few episodes, the larger point here is that this stock really has been trying and failing to break through the highs. And so the question is does it in the near term correct because of the disappointment of breaking through? And what is that incremental catalyst that can ultimately push it through and onto new highs? So much for Lowe's in the video today. Otherwise, in the daily brief, we discussed the Fed minutes that came out yesterday. Hopefully, you will have a chance to read this. It should already be in your mailboxes if you subscribe to it. If you don't, you can go to Toggle Global and get it there. It's a daily dose of market relevant content whose sole aim is to potentially spark one or two trade ideas for your consideration. Otherwise, like this video or subscribe to our YouTube channel. We do this every market trading day. The goal is to break down the barriers between you and the vast ocean of fundamental and market data out there to help you really map the changes in the data onto the implications for assets that you actually care about, meaning are earnings rising going to be good for that stock or bad for that stock? What do analyst expectations mean? And so on. Thank you for your attention, and we'll see you again tomorrow.